Hello, this is James Smith at GannAnalysis.net. Today I'm looking at the NSE Nifty 50 Index. And if we anchor from this high in October of 2021, and then we anchor from the low, the second anchor from the low of June 2022, we can project a square forward making use of that same range in price and using a square developed by the one by one, which we establish at 64 points, the price unit, 64 points per week. What that means is that the slope of the line is rising 64 points every week until it reaches the level of the prior swing high, at which point you complete the square in time. That's how you design a square of the range by price. We establish the one by one line, the 64 point per week slope, and that's what creates the square. Every other line revolves around that one by one. So a 2 by 1 would be twice that slope, 128 points per week. A 1 by 2 would be half that slope, or 32 points per week. And that's how it works. You can create a lot more lines on here if you like, but it gets pretty messy. I just think you should focus on the 1 by 1, where it crosses the level of the prior swing high. That's where you terminate or complete the square. That's the end of the first square in time. And the first square in price is the same level as the prior swing high. Now, notice here that halfway through the square, you had a high and it sold off. And then on the 2 by 1 line, you found support. Also on the 50% retracement, you found support. It bounced. That was a time and price setup. 3/4 of the way through the square in time and 50% in price was major support. Time and price came together. Boom, you got a rally. Now, if this were a weak market, as you got to the completion of the square in time, it would have sold off. But because it's a strong market, it actually accelerated higher as you completed the square. The only thing the square tells you is that you're going to get a change in trend. And sometimes, if a market's really strong, it will be an acceleration. It is a turn, but it's a more accelerated move higher. That's what happened because the Indian stock market is one of the strongest markets in the world. It has outperformed most other major markets. So that's why you got that rally. Now, if you go a quarter way through the second square in time and 1, 2, halfway through the second square in price, that was a time and price setup and it sold off. But because it's a strong market, it doesn't go all the way down. It just goes down a little bit and then it breaks above this 2 by 1 line here and boom, it's off to the races again. Where does it stop? At the completion of the second square up in price. That's where you find resistance. It kind of trades sideways, it gets above it, and now it's support. And then it takes off again. Now, as it continues higher, you'll notice here that it didn't stop at the third square up in price. That's where I would have thought, if this were a weak market, that's where it should have stopped. I mean, honestly, you can see the second square gave you resistance. It took a while before it got above it. The third square should have stopped it. It didn't. Well, that shows you how strong it is. But maybe it wasn't as strong as invulnerable, because as you got 1/4 of the way through the next square up in price, it actually topped, and 1/4 of the way through the next square in time. So again, a time and price setup. That set up the sell-off. Now, where did you find support? On a 2 by 1 line. So if this breaks, you're probably going to get a waterfall decline into the week early January, the week of January 6th through the 10th. That's when you're likely to find support in time. We don't know about price. I don't know exactly how low it will go. It could go here, it could go here, it could go all the way down here. We're going to know, don't worry about price, worry about time. Time is more important than price. If it breaks below this green 2x1 line, it will go down here to the 1x1. If it breaks that, it's really gone. It's going to go down hard. I think this is the completion of a major bull market, and it's about to sell off. So it is still a strong market, don't get me wrong. I'm not saying it's going to stay down forever, but at least probably into the first week, second week of January, the week ending the 10th of January, it will probably find a low. Now, it's not to say that this is bulletproof. If it's entirely possible that it breaks down hard and then forms a lower high here and then continues down. You're going to have to wait and judge what the market does going into that week of January 6th through the 10th, and then make your decision relative to what happens. If it's really oversold, and let's say it's all the way down here, yeah, no question, you should probably be exiting your short positions and going long. If it goes down hard, but then it rallies back to this level and forms a lower high, well then, hey, maybe you should add to your short position. So I'm just saying, let the market tell you what it wants to do. Don't have some preconceived notion of what the market is going to do. Wait and see, because time is more important than price. If you rally back, but you find resistance at this level, you're probably going to continue down in the new year. But if you sell off hard into the early part of January and it's super oversold, I mean, if you get crushed all the way down here, you know it's oversold and you're probably overdue for a rally. So the concept of Gann is based on the idea that there's a relationship between time and price. You always want to respect that relationship. When the two are in balance, you get a change in trend. Sometimes it's an acceleration of an existing trend. Sometimes it's actually a top and then you reverse and go down. And it's not easy to trade even if you know it's coming, because you can be wrong. You might have shorted here. You might have thought, well, this is the end of the rally, we're going down. You have to respect what the market gives you. If you see it start to move up, hey, get out of harm's way. Or in this case, if you see it showing resistance halfway through the second square in price and it starts to sell off, then you got to get out of harm's way. So deal with what the market gives you, not what you think is supposed to happen. Like up here, I would have thought that this would be a high, but it blew through it and went even higher, up into 1/4 of the way through the next square up in price and 1/4 over in time. So 26,280 was big resistance, and boom, it sold off. Now, could I be wrong about this? Yes, entirely possible. Let's say that this support holds and then you rally back and go to new highs. Well, okay, that means the market is stronger than I thought. So you're going to have to relate to what the market gives you, not to what you think is going to happen. I think it's going to go down here, but hey, if I'm wrong and it doesn't take out this 2x1 line, then hey, it's just going to keep going back up. All right, so listen to what the market is telling you and you'll be better off. But I think there's a good chance as we go into November, it won't just be the Indian stock market, but the S&P, the NASDAQ, the FTSE, the Nikkei, a whole range of markets are likely to come off. But let the market tell you what it wants to do. Don't preconceive. Don't trade on the idea that you know everything. Trade on the idea that the market will tell you what it wants to do and then follow what the market gives you. So if you're going to break down here, we're going to find out in the next week or so. Boom, it starts to slide. It starts taking out this line and it takes out this line. Okay, then you're really going down. So that's a brief introduction to the square, the range by price, and it shows you that even though this square has long since come and gone, we're now more than three squares up in price, and we're 2.5 squares, two and a quarter squares over in time, and it looks like the next halfway through the third square in time is going to be an important time frame. Now, I do have other Gann charts which will continue this thought. If you want to see all of those Gann charts on the Indian market, the Nifty 50 index, then that's why you want to become a client. But, just even if you're not interested to become a client, follow this chart and see what happens going into January 10th. I think you'll find that quite interesting. It will be a turn. It'll either be a lower high or a low. I think that's a given. Time is more important than price. Watch to see what it's doing as the cycle comes due. So if this is the completion of one square, the second square, halfway through the third square is going to be important to the Nifty 50 index. I think it's fascinating to see how this plays out. It gives you something to look forward to. Circle that week on your calendar and then watch to see what happens. I think you'll find it very interesting. Good luck in your trading. I hope this has been helpful. If you like this video, give us a like, follow us on social media. Thanks for your time.